Just a quick note. So there's debt which is paid by general property taxpayers, and then there's debt which is paid by those people who benefit for improvements taken from that. That's called what? Special debt, assessment debt. Now within that, there are two flavors. There's one where the government guarantees that it will pay the debt if the property owner doesn't. And there's another one where it tells the bondholders, hey, you're on your own. If the property owners don't pay, it's your problem. What do you think the chances are of selling that kind of debt? Not very good. So in most cases, governments do what? Sell special assessment debt where they back it up. And if they back it up, it's shown here. If they don't back it up, it's shown in, as we'll talk about later, in the agency fund, in the fiduciary funds. Okay? But so two types of debt: general debt, geo debt, from property tax, general property tax, and then special assessment. Special assessment, two flavors. Those debts which is guaranteed by government and that which is not. Okay? If it's guaranteed by government, it looks exactly like the geo debt which we just saw. Okay, in this case, they did $1 million worth, and where are they getting their money from? From the property owners. So when they set up a receivable, here $1 million worth of special assessment has been levied, payable in 10 equal assessments. I want you to just think about this journal entry for a minute. See if you get this journal entry. How much money do they expect from the property owners over 10 years? $1 million, right? How much of it is current? 100. Everybody see this? 100 in revenues and 900 in deferred. So what's the current portion that's receivable? 100. And what's the deferred? 900. Okay. All assessments were presented along with 8% of interest on the previous unpaid balance. Okay? 8% of $1 million is 80,000. That comes in as revenue, and that's all we do here. Next year, what happens? Actually, we need to pay. We got the money, now we need to pay the principal and interest. So you need to record with debt service fund where the money is coming from and how is it going. If you get those two transactions, you got it. There's nothing more to it then. Usually get it from the general fund, or in this case, from the special assessment property owners. Notice what happens the second year. After you close these accounts, oops, they don't show you the second year. What are you going to do? You're going to reduce the deferred revenue by 100,000 by debiting it, right? And create another current assessment. So this entry keeps on repeating itself.
So wouldn't it be 800,000?
Yes, now it's 800,000 left in deferred revenue because it was 900 before, right? So now we're debiting it, right? So now it's what? 800,000 which is left. So this entry keeps on repeating every year, this entry that you see. Capital lease obligations. I think we talked a little bit about this. Why is it shown here? When we talked about it already, it's shown here because some entities show capital leases in debt service fund. They do. Some do, some don't, but some do. And that's why you see the example here. This is the same entry that we saw before. Okay? Now, let's take a look at, I want you to just think about this transaction for a moment. First, the unpaid lease obligation at the beginning of the year was $57,590. and a $10,000 lease payment is made at the end of each year. If the lease has an interest rate of 10%, first the math. 10% of 57,590 is what? 5,759. That's the interest. How much are you paying each year? 10,000. So what's the balance? Principal. See how we backed out? We did what? The interest calculation first. We knew what the amount was. This is like your home payments, your mortgage payments, okay? Your car payments. So this number here is backed out from taking this number minus this to come up with this. It's not good enough to just show $10,000 expenditure lease payment. You need to break it down into interest and principal. Key calculation you should be aware of. Always take the ending lease balance, calculate the interest. Once you got the interest, subtract it from the total lease payment, and you've got it. Next topic, debt refunding transaction. This is not a terribly important area, but it's an interesting area because, you know, who's one of the biggest debt refunder in the world? United States government, U.S. Treasury. They refund bonds all the time. Treasury bills every